But let's talk about some of the other earnings that came out after market hours. Now, Mphasis reported a strong set of numbers for its fourth quarter, with the FY18 constant currency growth being about 11.1%. CNBC TV18's Rukmini Rao caught up with the management. Here's what they had to say on the growth trajectory going ahead.
FY18 has been a good breakout year in terms of growth. I'm very glad that we grew 11+% for the full company in an environment that wasn't so tailwinded, at least for the better part of the year. Of course, the last quarter has seen a little bit more uptake. So I think we're very pleased with the fact that we were able to bring growth back into most of our business segments, and especially pleased that bulk of our new wins came in the right areas of new gen services, and as such we seem to be making good progress towards turning the corner from a digital perspective as well.
Sure. 30% of the deals in the new the deals that you've won has come from Blackstone clients. So in terms of mining, Blackstone, you seem to be doing pretty well. Is there more space for you to kind of get more business from Blackstone?
Again, this time last year when we talked about opportunity, obviously, we had to still go out and win some business. So I'm glad with the progress we made so early in our tenure with Blackstone. It's a strategic, owner. There is almost 100 companies in their portfolio. We started with a handful in FY18. We'll mine these. We'll mine more. That pool is not a static pool. It actually changes pretty dynamically. And I think we have the visibility, the track record, and the support from Blackstone top management to continue to win more business. Collectively, I think there's a very large opportunity because they spend between $1 billion to $1.5 billion a year. How much of that we can tap into? How much of that comes up for renewal? How much of that is new investment? So that's kind of the dynamic. But I think there's a very long-term opportunity
$1 billion
there.
From the entire portfolio.
Yes.
Okay. Surya, we've seen quite a bit of margin expansion this quarter as well, and you've guided pretty robustly for the coming year. What have you factored in for this increased guidance for the next year, and also in terms of headwinds, what has been accounted for?
Sure. So I think if you really look at FY18, we have quarter on quarter progressively increased the margins. We have taken a lot of steps in not only in optimizing, including the change in business model, and with that background, we are quite confident of the the revised band of EBIT, which we announced for FY19. We have in terms of the headwinds, we have factored in lower hedge gains, which will happen because of the way dollar rupee is moving, and also the probable wage hike further down the fiscal year.
Sure. In terms of, since you've spoken about rupee volatility, I know it is not predictable, but some kind of short-term vision or visibility that you have in terms of how this could be panning out?
It's, I think, very difficult, and I'll be the last person to hedge on or bet on the dollar rupee movement. But we follow a very consistent and stable hedging policy, and we'll continue to do that.
Sure. Nitin, in terms of digital risk business, do you think that it is stabilizing for now?
I think when we started the year, we had a lot of work to do to bring back the margin to at least, in the vicinity of our company margin. And from that perspective, we said FY18 was all about stabilizing the top line, but expanding the bottom line. We are very, very happy that we actually brought our EBIT from that business to low teens, from mid-single digits at the beginning of the year. We also said we'll stabilize the top line, and I think we ended past the top end of the band that we had guided. So we saw some growth coming in digital risk in Q4. And I think as we enter FY19, we talked about a renewed focus on an integrated go-to-market approach across all of our clients, across all of our segments. And we do believe that as that plays out over the next 2 or 3 quarters, we should actually, at least in our minds, we made the shift that every client is a growth opportunity, and that includes DR customers. So I think we should start to see, hopefully, results, coming out of that integrated one Mphasis approach.
Also thoughts around the insurance business. Is that kind of the dip that we've seen, a short-term drip?
I think there was a one-time issue that led to an exceptional gain in the revenue. So we clearly think that stability is already there in that business as we speak. Our pipeline in insurance is actually pretty good because given the interest rate environment, we are starting to see insurers spend money, especially life and retirements or consumer-facing PNC. Even insurance brokers, actually, we announced a deal with the large insurance brokerage business in the UK recently. So I think that the pipeline is very, very good, and I'm pretty confident that we should be able to get growth back in insurance as well.
Sure. I know for a fact that you don't guide for FY19, but if we are to talk about Mphasis versus peers, how would you place Mphasis, taking on FY19?
I think the way we think of our business is if there is a guidance out there for the industry, which for this year happens to be the 7-9% range, can we actually continue to beat that market guidance? And while we do that, can we also continue to expand our operating margin profile? So that's kind of our two goalposts, your North Star that we follow, and I think that's what we've guided for the year.
Okay, so that's the management of Mphasis, but we need to get back to the markets. 10,756 is where we're